Hello everyone and welcome to our weekly global market outlook for the week of 5th of May 2025. I am Tolga. Over the past 10 trading days, the S&P 500 hasn't put in a single down session. Gold flirted with fresh highs before easing. Oil collapsed to its lowest level in 3 years, and the first negative US GDP print since 2022 remind investors that growth is wobbling even as equity prices climb. All of that sets the stage for a pivotal 5-day stretch in which the Federal Reserve meets, the Bank of England is widely expected to cut rates, and fresh batch of services sector reports will reveal how much damage tariffs and slower trade are doing to demand. Let's start with what just happened. US stocks enjoyed another broad rally. The S&P 500 added a little over 3%, taking its winning streak to 9 consecutive sessions, something we haven't seen since 2004. Technology once again led the charge thanks to stronger than feared earnings, while small and mid-cap shares finally joined the move higher. However, two tech giants underperformed as Amazon issued tepid operating income guidance and Apple services revenue missed expectations. In fixed income, Treasury yields dipped early in the week but snapped back after Friday's jobs report showed the economy created 177,000 positions in April and kept unemployment at 4.2%. That strength in payrolls stood in stark contrast to first quarter GDP report, which showed the economy shrinking at an annual rate of 0.3%. The contraction was largely the result of importers pulling forward purchases ahead of higher tariffs, so the headline looked worse than the underlying consumer spending figures, yet it was still a reminder that growth is slowing. Across the Atlantic, the euro area economy surprised on the upside with a 0.4% quarterly expansion. Equities responded with a 3% weekly gain, although business confidence surveys continued to sag and core inflation in the bloc nudged higher to 2.7%. In Asia, the Nikkei rose just over 3% as the Bank of Japan left rates unchanged and signaled patience in the face of global trade uncertainty. Mainland Chinese shares drifted lower after both manufacturing and services PMIs slipped back toward the contraction line. On the commodity front, crude oil tumbled below $60 a barrel, down 18% for the month, as OPEC Plus confirmed it will lift production again in June. Gold briefly traded above $3,400 before easing to roughly $3,310 as real rates steadied. Meanwhile, the dollar index finally bounced, clawing its way back to the 100 level after spending most of April on the defensive. That brings us to the days directly ahead. Monday is all about services sector sentiment. The US ISM non-manufacturing PMI, Chinese privately compiled Caixin services reading, and final numbers from Europe will tell us whether the tariff shock is bleeding into the consumer-facing part of the economy. On Tuesday, attention swings to trade data. The United States and Canada both published March balances that should confirm another surge in imports. France releases industrial production, and Disney headlines the earnings beat. Wednesday is the main event. The Federal Reserve wraps up its two-day meeting and Chair Jerome Powell steps to the microphone. No one expects a rate charge, but markets are priced for 3/4 points cut by December, so traders will parse every phrase for hints on timing. Earlier that morning, Germany posts factory orders and the Eurozone prints retail sales figures. After the bell, AMD, Novo Nordisk, and several regional US banks report. Thursday belongs to Britain. The Bank of England is widely expected to deliver its second consecutive quarter point cut, lowering bank rate to 4.25%. Any dose shift in the vote split could knock sterling lower and steepen the yield curve. In the US, we will get first estimates of first quarter productivity and labor costs alongside weekly jobless claims, numbers the Fed will watch closely for wage inflation signals. Germany also drops industrial production data, while Nintendo, Toyota, Shell, and Coinbase headline earnings. Friday's schedule is lighter but still market sensitive. Chinese April trade report will show whether export momentum is stalling. Canada releases its monthly jobs survey, and Italy's industrial output print rounds out a busy week for European activity gauges. Geopolitical risk remains a wildcard as Washington and Beijing feel their way toward a tariff compromise and OPEC Plus telegraphs further supply increases. So to wrap up, equities are riding a rare 9-day winning streak, yet macro data flashing amber. Whether that divergence can last will hinge on what Chair Powell says Wednesday, how aggressively the Bank of England moves Thursday, and whether services PMIs and trade numbers confirm that the real economy is bending or merely bruised. We will be tracking it all in real time in our Telegram channel, the link in the description below. If you found this outlook useful, please hit the like button, share your thoughts or questions in the comments, and remember to subscribe so you never miss an episode. From all of us here, thank you for watching and have a productive trading week ahead.